Hey, good afternoon, everyone. Brian Hoops, Midwest Market Solutions. This is our closing commentary on Wednesday. It's July the 24th, and look first at the corn market in here. We talked about this last night. We did bounce off of this area here, this 425 area. That seems to be where commercial buying comes into play. We did rally today all the way up to about 436 and closed at 29, so not a great close. And I think we're just trading weather right now. From a lot of people I talk with from Idaho to Ohio, indicating the crop is not there in a lot of areas. I think it's going to take a lot of time before the market figures us out. The August supply and demand report tells us what acres will be and what the USDA thinks yield will be. But until we get harvested data or maybe the Pro Farmer Tour, we may not actually have a really good idea how good or bad this crop is. And things can change significantly if you start plugging in balance sheets with a 145 or 150 yield, and that would make a major difference to our balance sheets. And so a lot of marketing to be done here in the longer term. And I don't want to get caught up on just day-to-day activity here. This corn market, that it's not responding to anything, as there's really, you look at the weather, and the forecast did add rain into August, and that's what pulled corn back off its highs. But we know there's good buying coming in here, 425 and below. We know that this is good technical support around 420. If you were going to buy corn in here, you definitely put stops in below this area, because we take this 420 out, we're headed down to this 406. This is good support area. And, going back to these lows that we made in May to the highs that we made up here in June, that's a 62% retracement of the entire move. So I think, this 420 probably will hold. If it doesn't, we're going to 406, where there should be a considerable amount of buying interest coming into play. So keep an eye on the weather. That'll give you a direction. We don't have really any reports from now through August to give us much direction. That supply and demand report is it, August the 12th. Circle that on your calendars. Soybean market also had a rally overnight, right up to this 913 resistance we have on our charts, and then it pulled back, still closing about 3 higher, but off session highs. Again, we're still touching this uptrend line, very close to it. A close below it, you've got support here that we could close below. This looks like next support area. All this could be taken out here ahead of the August report if we get some rains to fall and help this soybean crop out. There's not much news. In fact, the news today was a cancellation of 100,000 beans to an unknown, so a little bit negative demand news. And when you look at this cancellation, there's probably going to be more to come. China has a lot of beans on their books that they have not shipped, and they may just end up canceling. That's probably what we saw today, was China canceling. Our crush numbers are disappointing, so that all points to an increase of carryover stocks of the old crop, means larger carryover in numbers for the new crop, and a little bit less pressure on us to grow a big crop this year. So we could find some weakness in here if we get some rain in the forecast. As far as wheat goes, fairly decent day, but just yesterday we were at these new lows. We're having a little technical recovery. We'll find some selling up here in Chicago, up around 506. Kansas City had a decent day, up 8 cents. Again, yesterday was a new low. We rallied back up. There's a lot of resistance right here. You can see 3 days out of this 4 trading range was some resistance up at 452. So you may get a bounce up into this range. Probably look at selling rallies in this wheat, especially if you're a producer that's sitting on some product. You don't want to be caught storing this wheat looking, unless corn and beans really take off, then that's really about the only way wheat's going to move higher. In the livestock trade, it was very quiet session. I drew this line on the chart here today, almost a perfect double top on the October contract. And if you look at December, you could draw the same type of line. You go back to the highs last week that we had. We came right up to it today and closed right near that. So we may try and poke above it. If we can't tomorrow, probably going to see a little bit of selling interest. There's bids at 109. Otherwise, not much other cash news in the country. Support down here at this low 112.40. Taking that out opens the door to go fill this gap here. The hog market continues to be on fire, but we did have a little correction today. We made new highs, pulled back, closing lower. This thing is way overbought. There's a gap here in the charts we could come down and fill. Overall, I think this hog market wants to try and move higher, but it's significantly different in price. When you've got $80 hogs in December versus 65, there's going to be some selling up in here from producers that want to take advantage of it as we get into the mid 80s. All right, have a good night. We'll be back tomorrow with our daily newsletter, and hope this finds you well. We'll talk to you again soon. This has been Brian Hoops.